Good morning, everybody. It's Dan Basse and Ben Buckner here on Tuesday, the 13th of January. It's the day after the USDA crop report that came out yesterday at 11 o'clock, and that report was bearish. I think if anybody was thinking about the political influence of maybe Trump and changing numbers to help U.S. farmers, that report kind of dashed that thought process. The report showed us that we had a monster pile of corn of 17 billion bushels this last year. U.S. corn yield 186.5, and as we've been barking, the USDA did increase harvested acreage on corn because of silage more than we thought. We thought we'd be up 500,000 to 700,000 acres. It ended up being 1.3 million. So add it all together, the world has a lot of corn. The world has a sizable amount of soybeans, with Brazil's soybean crop being raised to 178. We at Ag Resource think that number will grow to 182 or more. And also the abundance of wheat. We produce 45 million metric tons additional of wheat in the world wheat exporter hands compared to the prior year. And so at Ben, when we're all done with all of this, we've got a lot of grain. We need to find market prices that build demand, and that takes time. And so kind of fill us in what you're seeing or where you think we should go from here.
Yeah, I think what jumped out to me, and again, this is all kind of gloomy, but at the same time, it sets the stage for 2026. You know exactly what to do when you get periodic rallies or weather threats or speculative short covering. It's pretty easy what to do with those recovery stunts. It's managing forward risk. I think what jumps out to me is, and we can all kind of see and feel what happened in the old crop balance sheets for the U.S., the exporter, and the world numbers, and it makes sense what the market did. You know, extracting premium pretty quick. There was that risk that, like a year ago, the USDA would kind of shock us with a lower than expected corn yield and lower soybean production, but we've checked that box. That didn't happen. So here we are. To me, though, the theme is kind of the grids, the implied grids, when you think about balance sheets for next year. So what you're looking at, there are a lot of numbers, but here's our balance sheet. And we think because of, potentially record Argentine production, we're going to have to lower U.S. corn exports. Ethanol grind to date just hasn't been as impressive as the USDA thinks. But really the theme is more than that. You're carrying over lots of corn next year. We're going to take out something like 5 million acres and give those to soybeans. And even if our number is incorrect, the theme here is that next year's U.S. corn ending stocks on almost any scenario is the same as this year's. So even if you were to use USDA's carryover for 26, 27, next 26, 27 ending stocks are still going to be 2.1 or 2.2 billion bushels. So I think that's the challenge of the market. When we think about what it takes to drive this thing or make it different, it really, in all the work that we do, there's hundreds of man hours globally, it really just comes down to the yield number. And so it's all in the hands of Mother Nature. Same thing with soybeans. We're carrying over more. We're still a little bit more pessimistic on exports, but we're probably, given the market performance in October and November, going to give soybeans more acres. And so you have this additional ballooning of inventory. So again, what changes this? South American growing season at the tail end of that. So it's probably not going to be exports next year that change it. So it's got to be Mother Nature and weather in the U.S. again. So again, you know what to do when you do get potential weather scares in the Northern Hemisphere. And wheat, I think maybe one of the bigger surprises, and this is a little nuanced in the weeds, is we thought we would lose 1 or 2 million acres of winter wheat seeded area last autumn. But it turns out the U.S. farmer planted the same amount of winter wheat last fall as they did the previous year. And so that, I think, takes out the possibility today, at least, that the U.S. wheat balance sheet tightens again, unless there's weather issues somewhere. So again, thinking about the next 18, 24 months, we can raise U.S. exports and lower stocks if there's a problem in South America or Russia or Europe or Canada. Or we can lower in stocks in the U.S. if there's a U.S. weather problem with lower yields. But again, it all kind of centers, to me, I think, on Mother Nature. And so that's where we're going to get up every morning. And in addition to geopolitics, we just kind of check to see if there are any glaring climate threats in Argentina, Brazil first, but also as we get into the Northern Hemisphere season, look at soil moisture come planting. That's just, it's kind of a fairly easy strategy to us. I would say, though, the market worked very quickly on finding what's pretty close to fair value today. So on Monday, July corn at $4.60 was perfectly priced with this stocks to use to price model. The market dropped 20 cents, and it is, again, perfectly priced, at least relative to the current iteration of the USDA's balance sheet. So I think that once this all settles out in the next day or two, again, it's kind of like bulls and bears struggling for leverage in this new deflated price range, most probably. Soybeans are similar. I think it's this current price, 1077 July, does fit with the USDA's balance sheet. So both sides probably struggle in this kind of short term, but I think the next shoe to drop. And again, thinking about risk management and risk management exclusively, larger than expected South American production. We're not seeing a lot of weather issues there. What is the world farmer plant in terms of total cropped area in 2026? Is it meaningfully lower than it was last year? And so are we setting the stage to move these blue triangles further to the right of this price skew, at which point you got kind of lower fair value as you work things if there's not a weather threat. So in the end, not much change from the side of ag resource. We still know we want to hedge forward risk. There will be opportunities occasionally, but we know exactly what to do with it.
I think it's a good rundown, Ben. And, I think at Ag Resource, if we look at the bottom end of the range, we've got corn at its lowest price this morning than August. I keep thinking about 4 to 410 as March possibility for a downside potential in corn, somewhere between $4.85 and $5 on March wheat and 10.20 in March beans. So I think those are our downside targets. And it's hard for me to envision March oil getting much above 51 or 52 cents without real knowledge of RVO. And maybe that's the positive aspect of this report, is it does put more pressure on the EPA to come out with something positive for biofuels, at least down the road. Not sure when that announcement comes. I'm sitting at a hotel in Indiana today. I'm doing a speech for the Independent Seed Producers of America. The big theme we're going to talk about is supply and what's coming. But I will tell you this, is that as we look at the report yesterday, we have not reached a plateau in U.S. corn or soybean yields. And I use, of course, that liberally, because that has been a discussion in the market for some period of time, and even has affect USDA trendline yields. So as we think forward, if we had a good finish in yield, a good finish of summer, forgive me, I think the U.S. corn yield could have been above 190 bushels. I think on soybean yields, we would have been above 56 bushels an acre. So if we used grams or normal pod weight. So thinking about that, I think that helps set the stage a little bit in terms of thinking on why you need to reward risk, because if extra yield comes along, it does help your farm income. But again, selling forward makes a lot of sense in these kind of markets. Any finishing comments, Ben?
No, that's correct. Yeah, we've just kind of checked off a lot of the boxes, or we're eliminating what could have been potential risk. And I think now it's just waiting for a weather issue, and we don't see any in South America. So supply still the dominating factor for price discovery.
Yeah, absolutely. Well, everybody have a good trading day. Again, unfortunately, the price trends are still lower, but if you followed Ag Resource advice, you should be in a relatively good position. Have a good day, everyone. We'll be back soon.